All right, another week, another what the F happened, and oh my gosh, do we have stuff. Everything we're going to go over today is going to cover a wide array of things and things that are vitally important for pretty much every person that lives in the United States of America. But also, if you live in Canada, I would say these are vitally important as well. I'm going to uncover a couple things that you probably don't know, but pretty much not conspiracy theory stuff, but pretty much factual things. I've been reading a lot of books, but factual things that are happening right under your nose that you need to know about. But not only that, we're going to talk about all the other recessionary periods. And I'm kind of going to spill the beans a little. I got a YouTube video that we're creating that's going to be fire. But we've done extensive knowledge on previous recessions going all the way back to 1957 to 1958. We're going to leave the Great Depression out of this. And we're going to look at what were the economic conditions and the interest rate and inflationary conditions during those periods. And then I'm going to show you how what you're seeing today, what's happening today is exactly the same as every one of these periods of time before they went into a recession. Then we're going to cover, well, I think I already mentioned this. We're going to cover tariffs. Okay. We're going to talk a little bit about trade and some things that you definitely need to know about, like tariffs and why Canada, our closest neighbor, our ally, if you will, has been targeted. And there's some interesting news that I found in this economic report that I think will kind of, and I don't know why the administration didn't just come out and show this or say this, but you're going to understand some things that I did not know. We're also going to look at how the high income earners are being squeezed right now. Anyone making over $100,000, there's a report that just came out. Literally, they're having a hard time paying their bills. Anybody like at $150,000 or $100,000, they're pretty, actually people making over $100,000, over 30% of the population said they're struggling. We're going to go into these topics because that's what this show is. What the F happened, where we rant, we rave, and we will argue about what's going on in the world, the economy, and your pocketbook. We'll be right back after this. All right, welcome back, everybody. Welcome back to another episode, another weekly episode of What the F Happened, where we rant, we rave, and we will argue about what's in the news, what's going on in the economy. But you know what? We've taken this show to a whole new level because this show started with just the news. But what you see in the news is never the truth, never the full truth, maybe a glaze over of the truth. But what I have done is gone out and got newsletters, paid for newsletters and white papers, and also lots of books all about economists. That's right. Economists, geopolitics, and all of that. So I've been studying these white papers because I found that the truth lies in those far more than the news. So getting this started, let's kick this off. Thanks for joining us, everybody. I love the comments. And also, please feel free to put your comments in the chat. I'll be reading them. It's just going to be me today. Stephen is jealously out in Vermont snowboarding with his son, and it is a bluebird 60-degree day here in Buffalo. Why am I not snowboarding? Well, I'm not snowboarding because I've got a lot to talk to all of you about, and that's what we're going to do. So let's dive right in. I figured I would start with some things you probably don't know. These are kind of just some things that came out of a book. There's a lot of books from this one author who we know well, Barry Dyke. He wrote a book called The Pirates of Manhattan. He wrote a book, How Private Equity Works, Titans Become the New Robber Barons, and Guaranteed Income 2.0. And he's got another one, The Retirement Ruse, which I got right over here. If any of you are looking for a little shameless plug, not my book, but looking for an interesting read, it's a bit of a heavy read and a bit of a factual read. But right here, The Retirement Ruse, How Stock Buybacks, Cryptocurrencies, Unicorns, and SPACs Helped Destroy America's Savings and Retirement Plans. So you don't think your retirement plans are under attack? Well, they are. 9% of the entire U.S. population trusts Congress. Let that sink in. Only 9% trust Congress. But this one's pretty interesting. Something that we all know very well, banks. A Gallup report in 2024 showed that only 23% of the entire US population trusts banks. When I read that, I'm just like, woohoo! I'm like, if that few people trust banks, then what I'm doing is making an impact, because I teach you how to take back control of your money, how to be your own bank, and how to create your own private banking system. We'll be talking more about that this afternoon at 1 p.m. for the week 3 of March Money Madness. So we are doing March Money Madness. You're probably familiar with March Madness, the basketball, but we're doing March Money Madness. Week number 3 starts today. If any of you want to join us, go to chrisnaugle.com/MMM for March Money Madness. Register, no cost at all. You join us at 1 p.m. So here we go. Let me read a couple things. Now, let's leave politics out of this. So I want you to just get politics out of this piece. But right here, electric vehicles and the autonomous vehicle projects. So what are your thoughts of that? Put it in the comments right now. What are your thoughts of electric vehicles and the autonomous vehicle projects? And have any of you taken a taxi or whatever, Uber or whatever they call that with the autonomous vehicles? Really big out in Phoenix. I watched a lot of people getting in these cars. I said, hell no. I don't want to be driven around by a robot right now. It's a little new for me. I'm going to get in the Uber with the probably terrible driver and probably have a higher chance of getting in an accident with the human driver than the robot driver. But, that's how I felt. But do any of you understand what this industry really has done for your tax bills? Who's paying for this? Oh, Elon Musk and GM and Ford and all these other companies. Wrong. If you were paying attention, you're paying for it. Taxpayers are paying for it. Here's the proof. So electric vehicles and autonomous vehicle projects have been a bust of more than $150 billion of taxpayer and retail savers money. Let me give you an example. Anyone ever remember Project Titan? Probably not. That was Apple's autonomous vehicle program. How about Bird Global? Yeah, that was another autonomous vehicle tied to electric vehicles. Carlots, Cruise. You remember the Chevy Cruise from GM? Did anyone look at how much money GM put into making the Chevy Cruise? Yeah, that bombed. Fisker, you remember that really cool electric vehicle company? Well, you'd only remember of it because it's gone. It was in the past. Fisker Automotive, Mullen Automotive. Some of you might remember that. Nikola, Proterra, Vroom, and there's a whole bunch more. Where are those companies? Gone. Gone. Who paid for them? You and me. Taxpayers paid for them. Let's keep moving on because this just gets even better. During the pandemic, there was a special purpose acquisition. There's a lot of these SPACs, they called them, right? There was a lot of these special purpose acquisition companies. And it was all the talk, all the rage in Wall Street. Does anyone understand those and what they were? Well, basically, Wall Street and Silicon Valley, these SPACs became dumpster fires with more than 44 major bankruptcies. So what did SPACs do? Well, people invested their money, their retirement dollars. Maybe some of you invested in SPACs. You put money into these, and what they were is these special purpose companies, these special purpose acquisition companies. And what these companies did is most of them went bankrupt. Let me give you some names. WeWork. Oh, all of you should know WeWork. How about Lordstown Motors? How about Nikola? How about Proterra? Some of the same names you just heard about with the autonomous vehicles, all bankrupt. What happens when you're an investor in a SPAC or in a stock and the company goes bankrupt? Yeah, you lose all of the money you invested. But hold on. There's a couple more. Let's see. I got some more info here, and I'm just going to go quicker with these. American savings rates. This is a fact, and this is not something I knew, is the worst, well, maybe not the worst, but one of the worst in the world, which means Americans are saving less money than third world countries. Whoa. All right. How about we keep going? Banks. Let's hit banks. This one should always piss you off. So let's talk about banks. Let's talk about the Federal Reserve, and let's talk about their corporate executives. How do they retire? Do they have the same things you do? Do they put all their money in 401ks? Wrong. Study it. Okay, the executives of Federal Reserves, the executive of banks, the executives of these companies, where are their retirement dollars coming from? Well, they ain't coming from 401ks. They're coming from guaranteed payments issued by life insurance companies. That's right. Their retirements are coming from life insurance companies and they are guaranteed, while the employees of these same exact companies, not the executives, the employees, are forced to put money into 401ks, which throws them under the bus and puts them straight in front of market risk. We'll cover that in a second. 72%, 72%, let that number sink in. 72% of all 401k funds right now, maybe a month old, but right now are invested in the stock market. And you want to look at that? All Night Solutions. That's where all the data is for this stuff. This is all fact checked, okay? Because it's straight out of these books. And I just have these notes here. Let's keep going. How about another one? Major corporations. We were just talking about life insurance companies. Well, where do major corporations fund the retirement plans? What major corporations? General Motors, IBM, GM, or BMW, GE, Bristol Myers Squibb, Aflac, New York Times, S&P Global, CBS Corporation, the BBC, the New York Times, Reuters. They all fund the retirement plans with life insurance companies. But yet we should throw the life insurance companies under the rug. And then also one other thing, one of the biggest threats right now to the life insurance industry, and I'm going to talk about IULs right here, right now. One of the biggest threats. Go out there. So you hear me talking about privatized banking, the infinite banking concepts, and be your own bank, right? They're all the same thing, just said different ways. All of that involves only using, let me be clear, only using, I don't care what anyone frickin' tells you, the only companies that work for that are giant, mutually owned, keyword, mutually owned life insurance companies that pay dividends. Now, why am I saying that the life insurance industry is under threat? Well, I'm not talking about mutually owned life insurance companies. I'm talking about publicly traded life insurance companies, which publicly traded, not all, but most IUL, index universal life policies, are issued by publicly traded life insurance companies. Now, before you throw me under the bus, I didn't say all, I said most are issued by publicly traded life insurance companies. Now, who has been going out there and buying up a lot of these publicly traded life insurance companies, and you don't even know what's happening? Private equity firms. You really need to understand private equity firms, what they're doing, and how they are literally gutting the publicly traded life insurance industry. It right now, as per this author, he says it is one of the greatest economic threats to retirement security and the financial health of the country, because people are being lied to, they're being given information, and they're being told a just complete false narrative as to what's about to happen. So how do you feel about the opening there? Well, you want some more? So we are streaming live right now with Facebook. A lot of you coming in from YouTube. We've also got Instagram going live here, and that's awesome. We got a bunch of people on here, and it is climbing. Let me just hit some of this right here. So Lynn said, no robot drivers for me. Meg said, yep, count me out. Morgan said, not interested. Too much control given over to smart cars. The electric vehicle SUV is the same car for a ton of the makes, just rebadged. That's interesting. Navigate Your Venture said that. The electric SUV is the same car for a ton of the makes. In other words, the electric vehicle under the shell of what it looks like, same exact thing. They're all just using the same thing. Lucid and Tesla are left. Yes. So Justin's saying there's two companies. So a guy in my neighborhood has a Lucid. Pretty nice car. I'm not into electric cars, but it is a beautiful car. They're still around, but for how much longer? Tesla, well, Tesla's run by Elon Musk, one of the wealthiest people in the world. But have anyone been following Tesla stock? We're going to cover that in a second. Actually, matter of fact, let me jump. I'm kind of all over the place, but I've got so much information. I want to hit Tesla. Here we go. I've got this thing about Tesla. Do any of you own Tesla stock? If you do, put Tesla in the comments right now. Tesla's down about 50% from its all-time highs. Okay. And I'm reading an economic report right here. So it's down 50%, but it is still Even though it's down 50%, even at where it's at, it's still one of the best performing stocks. I'm going to read this exactly. So it's still one of the best performing stocks in history at today's price, which is 50% lower than the highs. So today, it's right here. It says Tesla shares are still up 139x from its $1.58 self-adjusted 2010 IPO price. That's pretty remarkable. All right. But there was a 50% pullback. So here's the thing. A ton of people, and I've heard this too on some of my comments, I don't want to call them haters, but just some comments on my YouTube videos, have all said now is a good time to buy Tesla. Absolutely false. Oh, it's down 50%. Compared to what? It's down 50%. Doesn't mean anything. Doesn't make it a good buy just because it's down 50%. Because here's what you look at. And this is where you really need to understand how to look at a stock, how to look at its valuation, and how to determine whether it's a value or an overpriced buy. And right now, Tesla, even at 50% down, is overpriced. And here's where you look at it. You look at the eye-watering PE ratio. Right now is at 119. Now, that means nothing to most of you. So the price to earnings, 119, okay, the PE ratio. But now let's compare that over to other companies that you know also well-run automobile manufacturers like Toyota. Toyota, great company, great cars, Japanese, okay? They make all their cars here in the U.S. Why did they make all their cars here in the U.S.? Who can tell me? Because tariffs back in the 80s forced Japanese to bring their factories over here and make the cars in the United States of America because of tariffs. The same thing. Porsche, where is Porsche or Volkswagen cars made? Europe. What did Trump just do? Slapped tariffs on Europe. What did Porsche already say they're going to do? And this is Volkswagen, just so you know, I'm just picking on Porsche. We're going to manufacture in the U.S. We're going to invest in factories in the U.S. Already happening. The same effing thing that happened in the 1980s is happening all over again. And you got to ask yourself, why is Toyota made here in the United States of America? Ding, ding, ding. I am so sick and tired of people telling me that, Trump this, Trump that, the tariffs, they're bad, blah, blah, blah. If you say that to me, just prepare for a freaking vicious battle, because I have been studying tariffs ever since the first time Trump mentioned tariffs. That doesn't make me an expert. There are people far smarter, but all I did, and this is easy to do, is I went back in history. When else have tariffs been used? And I looked at all the other periods of time when tariffs were used. Some of them were relative, but too long. So, I'm like, I'm going to kind of discount that. But then I landed in the 80s. And I remember the 80s. I remember all those Japanese cars were being sold in the US and everybody wanted them because they were fuel efficient. They were well built. They didn't break down. And then against the US cars, which were kind of old and inundated at that time, I think they were awesome, but they were still inundated compared to what we needed because gas prices were crazy. Inflation was crazy. These Japanese inexpensive fuel efficient cars flooded the market, but they were all being made in Japan until, well, you can study history just like I did. And there's so many other examples, and maybe we'll get into them today. But here is the thing. Toyota has a PE, a price to earnings ratio of, can anyone tell me? 8. Remember where Tesla is right now at 50% off? 119. So you tell me, is it a good buy? Well, look up in Google PE ratio. Is it better to have a low or a high PE? Well, I'll let you decide that. Now, Toyota sales increased 6.9% over last year. So Toyota has seen an increase in sales of 6.9. What have been the increase in sales in Tesla since last year? Anyone know? 1%. So that's why you need to understand, know, like, and understand what you're investing in before you decide that, oh, it's just because it's 50% off, it's a good buy. It's a terrible buy right now. And that is just what I'm trying to explain. You got to justify the premium valuation. And these are just little pieces of the puzzle. So I got some other stuff here. Let's come back here. This is really interesting, but I'm going to pause. Let me just read some of these comments because they're coming in heavy here and I love it. Let's see. Navigate your Ventures said, Helped my cousin-in-law just do that in the end of 2024, moved in between the two bond funds they had available. Not sexy, but seems safer than the alternatives. I believe Navigate Your Ventures is talking about long-term treasuries. I've been talking about this for a while. Treasury bonds, when interest rates go down, have an inverse price relationship to interest rates. So if rates go down, the price goes up. If rates go up like they did the prior 2 years, what happened to the price of bonds? They went down. They are a literal bargain right now. And you get paid. It's crazy. Not only is there huge upside in the and I'm not making investment recommendations. I'm just speaking facts here. You can make your own conclusion. Call your financial advisor. Ask them what they think about treasury bonds. If they tell you, they're no good, I wouldn't invest in them, they don't keep up with inflation, fire them. Fired. That's what you should say, because they don't understand, which blows my mind, because when I took the Series 7 exam many moons ago, one of the number one things that I had to learn in order to be a stockbroker, have a stockbroker license, i.e. a financial advisor. Today it's Series 65. Back then it was 66. And anyway, not getting even into that. But here's the thing. In that Series 7 book, the inverse relationship to bonds and interest rates was a very important thing. It was a huge part of the test. And any of you financial advisors that watch, if there are any on here, then you know this. So much of what you needed to know to become a stockbroker was in the bond market, was in that inverse relationship and understanding how that works. Yet somehow financial advisors of many of our clients, when they go back and say, hey, what do you think about treasury bonds? They poo-poo on them because they're not sexy. Just like Navigate Your Venture says, they are not sexy. Thank God they're not sexy, but they're consistent. And not only are they consistent, they're backed by the full faith and credit of the U.S. government. And not only that, you get paid an interest rate. Oh, yeah. And right now that interest rate's pretty freaking good. Look at the giant mutually owned insurance companies. What are they buying? Long-term treasuries. Why? Well, maybe they just know something that we don't, or maybe now they know something that you do know. Now, let's talk about who knows something you don't know. Right here and right now, you know that Warren Buffett is hoarding cash. What does he know that you don't know? Let's talk about that. All right. Let's talk about that right here. The market is showing signs of stress. This is going to be a YouTube video, so if you don't understand this, that's okay, but I got to kind of unpack this. The Fed, if they don't step in, which today, and the reason we wanted to talk about this is today, Mr. Jerome Powell comes on and gives the state of the Fed and says, okay, what are we doing with monetary policy? Are we going to increase interest rates, decrease interest rates, or keep them the same? If you look, they're probably going to keep them the same. But is that the right thing to do? Well, we can go back in history and we can look at that as well. And that's exactly what I'm going to share with you right now. Here is history. So this is what my team does. This is Jordan. We go in and we find this juicy data. It's all out there right here. Every major and minor U.S. stock market crash since 1950. Here they are, all outlined. I know you probably can't see that, but it doesn't matter. So when we look at this and we go through and they're all outlined right here, the recession of 53, the Eisenhower recession, the Kennedy slide, the 66 credit crunch, 69 to 70 crash, 73 to 74 crash. Most of you don't even know about any of these. This was a doozy, 81 to 82 recession. Woohoo, that was a tough one. The Black Monday, the largest one-day drop in history. The industrial index fell 22.6%, and the S&P 500 declined more than 18% in one day. Just to put that into perspective, what was that, last week, a week before, when we had that really bad week, the S&P in one day dropped about 2%. So remember, Black Monday was an 18% fall in one day. Okay, then the 1990-91 recession, that was when Iraq was invaded. Okay, the dot-com bubble. I lived through that when I entered the Wall Street world right after that. I was self-employed, running skateboard, snowboard shops during the dot-com bubble. The global financial crisis. Now, hopefully most of you remember that was the Great Recession, the second worst and most serious financial crisis since the Great Depression. Okay, now this is interesting. 2011 August stock market fall was triggered by the U.S. being downgraded. I remember this. I was an advisor during this time, and this one was crazy. The United States of America got downgraded. It sent the markets into panic. My clients were calling me left and right. The uncertainty by the China-U.S. trade war rattled investors in 2018. Probably don't remember that. That was a rough one. Fears about the 19 to 20 COVID outbreak. Now, it wasn't a recession, but it was a major market downturn. So all of these things, okay, the stock market continued to rise over the long term, mainly due to 4 reasons: population growth, economic growth, inflation, and the fact that as an index, the S&P 500 always comprises of the 500 best listed companies in the US. The reason I said that is because right now the S&P 500 is so overly concentrated into 10 stocks that 60% of the S&P 500's performance is 10 stocks. One of those is Tesla. All right, so let's keep going. But what was the other common denominator that happened during this period of time? Let me flip over here and tell you. Well, the common denominator is during these periods of time, every one of those ones I just did, we were in a period of high inflation. We were in a period where the Fed had to make a decision to drop rates to stimulate the markets, and the Fed didn't act quick enough. In every one of those, that is what happened. So today, when Jerome Powell comes on and says they're going to hold rates, and Donald Trump and the Trump administration is saying we really need to cut rates, and listen, there's a little bias on both sides, okay? Because Donald Trump wants rates to be cut to stimulate the economy in light of the tariffs, because he knows the tariffs will rattle the economy. They don't always increase prices, but let's just go with the narrative and say they're going to increase prices because tariffs will increase prices until we shore up, all this industry back here in the U.S., which is make America great again. That's right in line with what he told us he was going to do. He's just doing it really fast and, well, pissing some people off. But the people that are upset about these decisions being made clearly have done no due diligence. They have done no homework. They do not understand tariffs. They do not understand the impact, short-term and long-term, on tariffs. Maybe they do understand the short-term, but they ignore what's on the other side of it. I have zero time or tolerance for incompetence. I have zero time or tolerance for people that say something with absolutely no basis, no bias, no knowledge of what they're talking about. Shut your effing mouth if you haven't done the research. And then shut up, go do the research, come back, and then we can debate. But don't sit there and tell me you know what you're talking about when you don't have the slightest clue, right? So this is my little rant and argument because it pisses me off and it probably pisses everybody off. How many of you in your area of expertise, how many of you have had someone come in and make a comment or a derogatory statement about you or about what you're talking about, saying you're wrong, and then you come to find out they know absolutely nothing about what they're talking about, what their statement was, and they have not done any research? How does that make you feel? Make you feel good? No. It pisses you off. So when we talk about the stock market, what's happening right now and where it's going to go, the one thing I will tell you is we do our research. We do probably too much research. I try to spill some of that on this show and kind of fill you in on what's happening. But when you look at it, you just have to know all of this is based on factual data. Let me give you some more facts. This is interesting. I probably shouldn't because I'm kind of giving you some of the stuff that's going to be in this YouTube video we're going to be doing. I've talked about this before, but maybe some of you have forgotten. This is, and I'm going to slide this over here. Okay. And I can't share this because I don't want to give it away. But the commercial loan crisis. Any of you heard about the commercial loan crisis? So if the Fed holds rates, and there's talks of the Fed holding rates the next 2 sessions, or maybe even not even lowering rates at all this year, as we, the markets are still bullish. I just want to be clear about that. We are still in a bullish trend, even though we sold off. We got into correction territory, but we bounced. Pretty typical. The market will typically test the floor a few times before it decides to head down. Okay, so we're bouncing and testing, but we're not moving up into a new range. We're not making new highs right now. We're just playing in this really. So let me kind of explain it like this. Here's kind of the markets. They're going to always do this. Now, if you were to draw a line on the S&P 500, that's kind of what it looks like. So this is where we're at. Notice how there's a lot of room here. This is where we were the last couple of years, where the markets can kind of go and fall. But what has happened is it has really kind of gotten to here now, where when the market contracts, it got about 10%. Okay, so if they go down 10% in roughly correction period, Okay, so that's where now the markets have to make a decision based on news and all these things and Jerome Powell. Anyway, not to bore you, but they have to decide, are they going to go lower down to the next level? So the next level would be probably down here, pretty big fall. So like if you look at Tesla, it's down 50%, and you're like, oh, there's no way it could fall further than that. No, matter of fact, it could fall a lot further than that. Tesla could probably go down another 50%. Well, because it went up so much, right? Anything that went up a lot has the ability to fall. NVIDIA, all of those. One of the companies I would say maybe is a good one to look at, not now, but in the future, would be Intel. That sucker's got beat up and destroyed, but hey, they're making major moves right now. But anyway, back to this. All we're doing is we're just playing in this tiny little range. So we got to decide, are we going to go, sorry, I can't draw it on my hand. Are we going to go higher or are we going to go lower? Where's it going to go? What's your bet? You think we can make new highs? You think everything's going to be good? Well, a lot of people have a lot of faith in Trump. A lot of people think that the economy is going to be great, but Trump himself, and I'll show you in a headline news, is telling you it's going to be pain before it's good. It's going to be hard before it's good. We're probably going to, he didn't say we're going to have a recession because that wouldn't be good for him, but more than likely, I'm telling you, we're going to have a recession and then it's going to get really good. And how do I know this? Well, because I know how to read this stuff, first off, because I know how to study this stuff, but you really want to kind of go into a dumb thing, and you can say this is dumb. I don't base my opinions on this, but I was sent this, and I've seen this a bunch of times, and I think all of you have too. Any of you ever see this thing? Do you realize this thing has never been wrong? Do you realize that this stupid little graph here, this little chart, has been around for a long time and has predicted every single recession with literally accurate precision? So let's just read where we're at right now. And it's very simple. It says A, years in which panics have occurred and will occur again. Okay. B, years of good times, high prices, and the time to sell stocks and values of all kinds. So I want to repeat that. Years of good times. That sounds like now, doesn't it? High prices. Definitely sounds like now. Yeah. Oh, yeah. And tariffs are going to make that probably a bit more. And the time to sell stocks and the values of all kinds. So, and then C is years of hard times, low prices, and a good time to buy stocks, corner lots, goods, etc., and hold them until the boom reaches the years of good times. So you got A, B, C. Who wants to guess where we're at right now, 2025? Anyone want to take that guess? Where are we at on this age-old little chart? Where are we at? Anyone? And I love it. Some of you are saying I'm a novice, but it doesn't matter if you're a novice. When you look at this, all I'm telling you is right now is not a time to buy. Right now is the time to sell, because 2026 is where this chart says, and I'll blow it up right there. 2026. Oh no. Now, I think that's probably pretty accurate, because I think 2025 is going to be this ping pong game, back and forth, back and forth. I don't think we're going to feel the effects, but in 2026 we are. But then here's the good news. From 2032, so this is a long one, 2026 to 2032. Let's count. That's 4, 5, 6 years of decline. And then from there, straight through 2035 is a boom. A big boom. So when you look at that, I'm not using this. I'm not going to do a video on that, but I just want you to understand, that has never been wrong. And I'm trying to explain, these are where we're at. These are the recessionary periods. They match up to every other recessionary period from exactly what was going on during those periods. Different, but all the same when you really just look at the data. But now you got one other thing that we really haven't talked about, because I'm often talking about what's going to be the domino that kind of tips this all off. Is it tariffs? Is it China threatening us? We've done all those. Hopefully the Ukraine war is going to end, so that's good. So lots of stuff happening. Threats, trade wars, the end of global trade or world trade as we probably know it is underway. A lot of crap going on. But here is what I think could do it. The commercial loan crisis. It's a ticking time bomb. Let me just read you a little bit about what we have. So here's the thing. We are standing right now at the edge of the biggest commercial real estate collapse in decades. Why? Well, during the pandemic, everybody went and worked from home. Nobody was working in these commercial buildings, these office buildings. But what most people don't realize is how the mortgages and how the debt on those commercial buildings works. Any of you real estate investors, you probably already know this. When you take out a commercial loan, okay, and let's just pretend you did this, I don't know, 5 years ago, when interest rates were what, 2, 3? Let's just say you got a commercial loan on a big office building for 4%. Chances are your commercial loan had a rate lock of 5, no more than 7 years. Most were 5. Some were less, some were more. Okay. Let's do the math. So any of those buildings that were bought during the pandemic, which is when a lot of activity was happening because money was cheap, there was lots of money. We'd just come out of the pandemic. People were rampant going out there buying things, driving the price of everything up, paying top dollar for these things, doing it with cheap, temporary money. We are at the edge. So most commercial loans have these rate lock periods of between 5 and 10 years. Ding, ding, ding. Do the math. We are at the expiration. But when does the real expiration hit? Heavy in 2026. So all of these maturities, all of these commercial buildings that were bought during that period of low interest rates, that period of when everything was going up in price, which stimulates people to buy, easy money, cheap money, good economic times, rising prices, good opportunities, all of them are going to mature. Now, if the Fed doesn't drop interest rates, where are rates going to reset? So let's just say you got a mortgage between 3 and 5%. Where's it going to reset today if you matured? Not at 3 to 5%. It's going to reset at like 7 to maybe 10%, depending on your risk and everything else. That's a double. In some cases, these mortgages on these office buildings, which definitely are not seeing 100% occupancy, not even probably 80% occupancy, they are going to they're literally going to fall off the cliff. So what is going to happen? Well, a lot of people are going to probably default. But I've already covered defaults. I've already covered all the default rates that we're seeing. Okay. I've covered the delinquencies. They're all on the way up big time when it comes to commercial office buildings. The delinquencies are rising just like the stock market did, which is fast. I want you to let that just sink in for a little bit. All right, so let's just see here. Navigate Your Venture said, is the next 50% the next support line for Tesla? I'm a novice, but I understand support lines a bit. So support and resistance lines are very easy to draw. You just go into any stock, you go back however long you want, 3 years, 2 years, 1 year. And all you do is you just look at the little lines and you just connect the dots. It's like connect the dots, right? You just draw a line at the top but you got to make sure that the stock market's like top part of the stock market move, it has to hit that line at least 3 times. That's your confirmation, 3, no less than 3. And then your floor resistance line is the same thing. Draw a line, but look at the bottom part of that, and what am I talking about? I'm talking about these things, right? These things. Draw a line at the top and then draw a line at the bottom. Support, resistance, floor, ceiling, okay? Support, resistance. Has to hit 3 times. So when you do that, you can start to conclude, okay, where is the stock now? Do I think it can run higher, break through the ceiling, or do I think it's going to go lower, break through the floor? Just think of it as you got a trampoline in your bedroom, okay? And you jump on that trampoline, and every time you jump on it, your head hits the wall. How many times does your head have to hit the wall before your head is now in the attic? Now let's do the same thing, but now let's just put really heavy steel, lead-weighted boots, and I want you to jump off the trampoline as hard as you can and fall onto the floor and push down as hard as you can. Just keep doing that, keep doing that, keep doing that. How many times you have to hit before you go through the floor to the next level? Same idea. That's how stocks work. Support, resistance. I don't know if that's useful for anyone, but it's just an easy way to look at it. Okay, B falling into C. Absolutely correct. Okay, so we got B's. We got Jim saying A. Okay, and then we got, what is that chart? I don't know what the hell they call that chart. You know what? I'll post this chart. I'll put it on that YouTube video we do. If Jordan's listening, I'll put this chart, which is basically just, this one says periods when to make money. It's been around. I don't know how long this thing's been around. A long freaking time. I'm trying to look at the date on here. 1875. So 1875, Samuel something Benner or something like that did this. 1875. This has been around since. Never been wrong. Let that sink in. 1800s. Some dude drew this thing and predicted it all the way out. And it has never been wrong? How? Maybe he had a time machine. Maybe he knew Nikola Tesla. I don't freaking know. All right, let's keep going. What is the name of that chart? Everyone wants that chart. I'll post that on YouTube when we post this new video. Okay, so give me like a week. 2026, ouch. Glad I'm here to begin to prepare more for the future. Well, if any of you are here to begin to prepare, where have you been in the past? Like, has everything I've said just fallen on deaf ears? Has FOMO overridden everything that I've talked about? Because listen, I've been talking about this for a while now. Yeah, would I have missed out on some gains? Yeah, I'm a bit conservative. I'm risk averse, and some of you are not. But at this point, it's pretty conclusive where we're headed. And I think you just need to kind of look at the signs and decide for yourself, do you want to stay in the market and take the risk? But to me, the juice is not worth the squeeze. And I can't think of any one stock right now, not a one, that makes sense fundamentally. I can't think of one stock that I would put money into thinking, oh, this is going to be a good one. Not one. Not one. Warren Buffett is sitting on $325 plus billion in cash. That dude doesn't sit on cash unless he knows something's going to happen. And I got to believe that Berkshire Hathaway and Warren Buffett and his team and his connections puts him in front of some very unique data that I could only dream of having access to, that gives him a little extra knowledge to make decisions that are far more accurate than anything I could ever dream of having. Understand? Because I sure do. If Warren's sitting in cash, sign me up, baby. He's got, and when I say cash, he's got a lot of treasuries as well. All right, so I want to keep moving on here because I got a lot of stuff to cover, and holy crap, where does time go? So we already did the Tesla one, so let's get rid of that. Let's go on to, let's get rid of that. Here we go. Higher income earners. I covered this a little bit, but people that are making over $100,000 right now, 30% of them are struggling, and 12% are struggling to meet financial obligations like loans, car loans, mortgages, credit card debts. Credit card debts are over $1 trillion. Okay, so with that, when you go down through and it looks, here's the thing. If a high income household continues to cut back on discretionary spending, it could lead to slower economic growth across multiple sectors. Potentially, outcomes include a prolonged decline in the luxury markets and high-end services. Okay, moving on. Reduced investment in housing and other big-ticket items. Okay, both of those are happening right now. Increased savings rates among affluent Americans could dampen the stock market growth. I just did a YouTube video showing you that savings rates are actually going up right now. A ripple effect on the middle and lower income households as business adjusts to weaker demand. When business adjusts to weaker demand, hold on. I just saw on CNBC that Delta and Southwest and other airlines have adjusted their outlooks, their economic outlooks and their future outlooks for profits, and said they're going lower. Who else has done that? I think Walmart did that. I'm pretty sure McDonald's did that. Holy cow. Wait. If all of that is what's going on there, where's my thing? Here we go. Then we just hit those four things right now. Those are all happening right now. You can see the more I tell you, the more I show this, there's only one plausible conclusion. There's only one place this can all go. What are you waiting for? What are you hanging around in the markets for? What are you looking at stocks to buy? Unless you're maybe looking at shorting, but what are you really doing? Unless you're a professional stock trader, really understand how to do this, understand a lot more than most of the public out there. Why are you in the market? Why is your 401k still heavy in equities? Keep dollar cost averaging in. Don't change your future dollars going into it. But why are you still sitting there? I don't know. I don't know what to do. What do you mean you don't know what to do? Do you not watch my YouTube channel? Do you not listen to anything that I say? It's pretty easy to understand what to do. Hey, and if you don't know what to do, cash is always a good opportunity. Cash is always a good place to go. Money markets, not a bad place to go. You're being paid. Put your money on the sidelines and wait for the grand finale where you can start buying back in. Oh, I still don't know what to do. Okay, great. In about 30 days, you'll be able to hire advisors through PMC Wealth that will give you investment advice and just hell, do it for you. Oh, I like that. I like stuff being done for me. Wow. Okay, let's move on. I try to teach people how to be good stewards of their money, be in control of their money, but yet some people just won't do it. They need somebody else to do it. And I've come to that conclusion. I've said many times, I'm never going back into the financial advisory world. And I didn't lie. I'm not. But I never said I wasn't going to build a financial company, a registered investment advisory company that will be different than every other advisory out there, because we are coloring outside the lines, because I listen to what the market and what the clients want that they aren't getting out there today. So I said, all right, I'm going to create a retainer-based investment advisor service that we are going to give people holistic investment advice based on a monthly retainer. You pick and choose how much time you need from the advisor, and we will review all the assets that your financial advisor probably doesn't want to look at because they ain't getting paid on it. And you know what we're not going to ask you for? We're not going to ask you to move your accounts to us, because we don't care where you keep your accounts. Keep your accounts at your financial advisor. Oh, he's a high school friend. Oh, he's a family friend. Oh, I couldn't move it from him. You're like, we're buds. We play golf. Great. Keep all your money with him. But how about a second opinion? Yeah. How about we go through everything? We get to know your needs and goals. We get to understand exactly what it is you're looking for, what it is you want, what it is you really, really want to have happen that your advisor just for some reason isn't doing. We're just going to give you a second opinion. And then you can go back and tell your advisor, hey, I was thinking about this. Could you do this? Oh, and here's why. But how about cash? Anyone managing your cash? Anyone out there, did you hire an advisor, and that advisor on a monthly basis looks at your cash accounts? What do I mean by cash? Your bank accounts. Oh, yeah. All your bank accounts. Anyone looking at your bank accounts to try to find you higher yield? I ask every single week, who's got the highest interest rate? Some people are like 4.57. Some people are like 3.8. Those are all good rates. Are you getting that? How come somebody's not managing your cash? Oh, because they can't get paid to do that. Oh, well, we'll do that for you. We'll manage your cash. We'll give you FDIC insurance on up to $100 million per person. How do we do that? I can't give you all the secrets, because then I'd have to kill you. I'm just totally kidding. Scratch what I just said. I'm joking. Haha, jokes. Yeah, some people kind of get up in arms on that. But let's keep going here. Is this stuff good? I mean, when I do this alone, sometimes I just go down these rabbit holes. I think I'm doing all right. Like Brandon said, hey, you had a DeLorean. Morgan said, good analogy, but I just want to make sure this is landing. Instagram's been pretty quiet up here. Instagram, what's going on with you? Cat got your tongue? Cat got your finger? Can't make any comments? So Beglia777 said, much of Tesla's value is locked up in Optimus. Okay. Don't know what that means. So you probably know more about that than I do. Beglia777, you can't evaluate Tesla versus other CAR or other car companies. I agree with you wholeheartedly, because Tesla's a technology company more than it is a car company. But I just had to start somewhere. And, if I'm going to talk about Tesla, and then I compare it with Toyota from a PE standpoint. So you're right, though. I could have compared Tesla to NVIDIA, and they're probably pretty similar from a PE. I don't have the PE for NVIDIA or any of those other companies like Microsoft or Meta, but maybe that would be a better comparison. I'm not saying that you're wrong. Actually, I kind of like that. Tesla is not a car company, son. Okay, sorry, smarty pants. Like Tesla does make cars. They certainly make cars. The product they sell are cars, but I understand Tesla's a technology company more than it is a car company, but their product is a fucking car. All right. And then FSD will not be adopted until today. Preteens are old enough to drive. Older people ain't going to accept it. Not sure. So I love it. He's given great feedback there. Pushing back a little bit. I know Tesla's a technology company, but at the end of the day, their product is a car. So when I was just trying to compare like for like, Apple for Apple. Product. Company-wise, Next time, I'll compare it to Meta. I'll compare it to NVIDIA. I'll compare it to Apple. I'll compare it to Microsoft. Maybe then that'll be a better comparison. All right. Say, thank you, Capital J. Capital J said, it's a fucking car. If it looks like a rabbit, hops like a rabbit, smells like a rabbit, well, it's probably a rabbit. All right. Let's keep going. What other stuff we got? Chris Bizub, what's up, buddy? Let's see. Tesla's a garbage car. Well, that's to the eye of the beholder. All right. Love the wisdom nugget. I have heard of a lot of problems with Teslas, but I'm not going to say they're a bad car. Some people just swear by them, love them. My neighbor's got one. He swears by it. I'm like, cool, man. I can't even hear you pull out of your driveway. Well, see, when I start a car, almost any car, when I start it, I like that rumble. I like to hear that brum. I don't know. I know that means burning fossil fuels, bad for the economy, all that stuff. But when you look at what a battery is made of, and you look at what that does to the earth and all the things that go into making a battery, then when you got to dispose of the battery, yeah, it's pretty conclusive, right? I don't think electric cars are any cleaner than gas-powered cars at the end of the day. But again, in the eye of the beholder. Where do I sign up for advice? Well, it's coming. So Lisa, stay with us. You believe me, all of you that are interested in the cash management, the investment advisory services, it's coming to a theater near you called privatemoneyclub.com. PMC Wealth will be out in probably 30 days or so. We're putting together, we've been working on this sucker for over 2 years now, and we're just dialing in the final pieces, and then it'll be available. All right, so let's keep going. I thought this was really interesting. Tariffs. Come on, let's be honest here. How many of you have kind of like been really watching the charade of tariffs that, are they going to put tariffs on? Are they going to reduce them? Are they going to stop them? Oh, now they're going to go higher. You can't even keep track. But how many of you, when you heard that the Trump administration, or let's just say Trump, was going to tariff Canada, our northern neighbors? Listen, like, I can sincerely say this, probably with outside of tests, with probably pretty accurate standpoint, I live closer to Canada than probably 99% of everybody on this webinar right now. I'm in Buffalo, New York. Do you realize I, in 15 minutes, can be in Canada? Oh, yeah, eh? I can be in Canada. Yeah. You don't say, eh? Yep. And because I'm so close to Canada, I love Canadians. I think they're some of the nicest people you will ever meet. I have coached Canadians. I'm friends with many Canadians. We hang out at the resort. When I mean the resort, the ski resort with Canadians. I love Canadians. So when I heard Trump was going to put a 25% tariff on our northern ally, our northern neighbors, I couldn't help but to go back to Ronald Reagan's era. And Ronald Reagan, I don't remember who the prime minister was. Let's look it up here. Ronald Reagan, Brian Mulroney, I think it was, back in those days. Like, we had such a strong relationship with Canada, lots of trade with Canada. I just read this. So why would Trump try to harm our northern neighbor? Well, there's probably a couple reasons. I guess if you get down to it, Trump has very clearly stated he wants Canada to be the 51st state. He wants Canada to be the U.S. He literally has gone so far to say that somebody, when they drew the line, from Canada to U.S., just drew a line straight across. That's not the way any other country works. And he's probably right. But I think he wants Canada to become part of the U.S. So how would you do that? Cripple their economy, make it so they can't survive on their own, blah, 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 blah. Maybe. I'm sure there's some conclusive proof or evidence that would kind of drive that conclusion. But then he talked about fentanyl. I know we got a huge fentanyl problem, but I think the fentanyl problem is probably more of a Mexican border problem, which, oh, by the way, we're slapping tariffs on them too, which I understand that, because car manufacturing and auto parts, guess where we get almost all of those here? Canada and Mexico. All right. But you see, here's another problem, and this is something that you didn't know and I didn't know, so I learned something new every day from these economic newspapers. But can I share this? This is pretty interesting, okay? And I think all of you will get something out of this. This is a economic newspaper that I subscribe to, and right here, what they were talking about, and I'm not going to go into the whole thing because these economists, they go into these long stories, but essentially, this one economist was at this event, and one of the guys said, "Hey, and they're in Vancouver, I'd like to take you over to the port and show you some things." So when they went over there, and they left the conference, they went over and they're looking at it, and he's explaining all this stuff, is just explaining how cool it was, how it's like precision, and how they take the containers off the ships. They pile them. He said it was just like it was like art. But let's see right here. I want to come down here. Something very interesting occurred. You can see this. I thought this was phenomenal. Two men appeared, climbed into a flatbed, and began spray painting from cans onto the steel, which is the container ship that just came off of, and I probably left it out. So they're talking about a container that was just taken off of a Chinese cargo ship. Okay. And this container clearly is Chinese because it is marked in Chinese writing. So what they were saying is he watched these two men start spray painting over the Chinese characters, okay, that were stenciled on these containers, basically notifying that everything in this container is from China, okay, because now if there's tariffs or duty, that's going to signify that. And they covered up the Chinese characters with Canadian paint. So now a Chinese container was made Canadian. Little spray paint. Wow, pretty cool, huh? So what does that do? Well, according to NAFTA, we have a trade agreement with Canada that is free trade agreement. So Chinese goods come into this Vancouver port. They're offloaded on a Chinese ship into the port. Two guys come over and they spray paint over the Chinese indications, the Chinese markings, letting the people there know, hey, this is Chinese. There's a tariff on this, and then the tariff and duties are charged on it. But now that they spray painted over it with Canadian markings, now that Chinese container and all the other Chinese containers pass through to the U.S. under NAFTA, free trade, no cost, nothing. So what it goes on to say is a Chinese ship full of low-cost Chinese steel dumped at the distress level prices sailed to Vancouver. A Canadian crane operator was paid to unload it there, and a couple Canadian workers were paid to spray paint over the Chinese markings. And there we go. Voila. The foreign metal magically qualified as duty-free and passes into the U.S. Wow. Never thought about that. That's simple, huh? Chinese good become Canadian goods. Duty free. Until now. Yep. Until now. Ain't going to be duty free no more. Yep. So your aluminum, your steel coming from Canada or maybe from China is now going to have a 25% tariff. So what do you think is going to happen? You think we're just going to absorb that price and just be like, oh, that sucks? You think Canada's just going to be like, oh, that sucks. We're just going to stop selling steel and aluminum and in steel and aluminum are also auto parts and cars and all the things that they import to us. Because you've already heard, they're not really going to hit the natural gas and the oil too much. You think they're just going to do that? That would cripple, literally devastate tiny little tiny little Canada. Canada's population is like tiny. Like outside of Toronto and Vancouver and a couple other metropolitans, like there's not many people live there. And who the hell would? Shit, that's pretty freaking cold up there. Pretty dense. Okay. And that dense isn't the word, but it's just harsh. So what's going to happen? I would have to believe that those steel and aluminum manufacturers right across the border, 15 minutes from where I'm at, give or take, I'd have to believe that they'll probably set up shop in the U.S., start manufacturing aluminum and steel here. Because, I mean, hey, listen, that would be worth the investment. 25% is a lot of money. That's probably going to happen. What do you think? But I just thought that was interesting. I just wanted to share that because that definitely woke me up a little bit. All right. Let's see. I want to just see what your comments are. We got Capital J said that is an interesting talk with Sean Ryan and the guy who's from the World Bank. He mentions that China for years was being paid to export to us. Okay. Well, that thing right there, firsthand, that person saw it with their own eyes. Our population is the same as California, basically. Oh, so Nelson is from Canada. What's up, Nelson? So Nelson, is from Canada. He's a huge real estate investor up there, does lots of education. But he's coming in from Instagram and he says, our population in Canada is the same as California. Think about that. Think of how big Canada is. Their entire population is that of California. Wow. So, when you just look at all this stuff, like, what is the only conclusion that can happen? Well, industry comes over and comes stateside, if you will. You see a reshoring of industries. You're already seeing it across the board from Volkswagen and Porsche and all these other commitments. And car manufacturers bringing manufacturing back here, chip manufacturing coming back here. I was just in Texas and I had no idea, but if I'm not mistaken, Texas Instruments, Intel, and a couple other companies have built these ginormous chip manufacturing plants in Texas. All of those chips, guess where they used to be made? Overseas. They're not anymore. There's so much industry moving and reshoring because of what? The tariffs. And what is the number one thing that people hate about Trump right now? Oh, tariffs are bad. They're going to increase prices. What prices have gone up so far? So you really are making a statement that you don't even know to be true yet. And you also are making a statement that you don't even understand the ramifications in the long run. You're just playing the short run. So let's just keep doing what we did the last 4 years here in the United States. How'd that work out for us? Let's just keep printing money, devaluing the dollar, driving inflation, literally just destroying the country. Let's just keep doing that, right? That made a lot of sense. And anybody that can't see that the last 4 years were a complete disaster, I don't know what glasses you're putting on. I don't know what your rosy colored glasses show, but boy, like, can I drink what you're drinking? Can I put your glasses on just to see it? Because listen, that whatever you're looking at looks like a pretty freaking good movie, but it ain't real. It ain't real. And the things that happened in the last 4 years are one of the biggest reasons we're going to go through a recession. And that is not my opinion. You can't do all the things that happened in the last 4 years and expect the same outcome. Eventually, the bubble's going to burst. All these economists are saying it. And I had one other one here, and I don't know where it is, but right here. Let me just show you this. I'm running out of time. I'm already over time, but man, I just got so much stuff. This one right here, this is top line news. Trump policies promise an economic downturn, says prominent forecaster and first ever recession watch. So what this does, this goes through and talks about this watch. And it just says, while there is no signs of a recession happening yet, it is entirely possible that one could form in the near term, stated a new release from this forecaster. So then it goes on to kind of talk about all these different things. You can read these articles. This is just CNBC. But what else was in CNBC? Bank of America CEO says economic growth is better than people think, says the bank CEO. Okay. Yep. And the Fed should stay on hold. Who owns Bank of America? Anyone? What happened to Bank of America in 2008? They were forced to buy Merrill Lynch because Merrill Lynch was failing. Bank of America literally took massive bailouts. So who owns them? Is it Bank of America? Or do you think there's some influence there from the U.S., from the government? Okay. How about here? Zelensky says he will talk to Trump as Russia, Ukraine report overnight strikes. So we're trying to get to the bottom of this thing. All right, more lawsuits against Trump. I'm just going through them. XRP, we talked a lot about XRP when I was out in Texas the last 2 days in meetings. And I still think XRP has one of the best use cases in the crypto world. I know Bitcoin is the one everybody talks about, but XRP should be the one because that's the one that's going to allow for a whole lot of trade going on internationally. Surges after Ripple CEO, whatever. Boeing shares jump. Interesting. Okay. Management firms in the United States, just kind of, you just kind of go through a bunch. There's that one that I was just reading. How about the astronauts that got stuck up in the space station? Anyone really happy that they're home? My mother is thrilled that they made it home. But anyway, enough of all that. Let's just take a look at the comments here. So Nelson came in and said, Canada is the richest country in the world in natural resources per capita and the richest in fresh water. True and true. I would like to see an economic alliance with the U.S. Imagine the power combined. I honestly can't even imagine what that would be. I mean, like, you look at the U.S. right now and you look at the rest of the world, the U.S. is still the superpower, still the biggest economy, still the richest country in the world. combine that with Canada, where Canada is the richest country when it comes to natural resources and the richest country when it comes to fresh water. Pretty freaking important. And Nelson, I do want to preface that I got a couple of those Great Lakes right here, buddy. Yeah, I got some fresh water right in my backyard. But I think you're right. So what would that look like? I don't know. Can we see a future where that alliance actually happened? That'll be interesting. Let's see. Navigate Your Ventures down here on YouTube said Canada will probably save some on the spray paint. Yeah. Hey, think about that. Like, listen, like with these tariffs and like none of this nonsense going on, like, hey, now they don't need all that spray paint. And they can probably lay those two people off. Just kidding. All right. Canada's entire population equal to California. There's Brandon saying the same thing. Incentivize steel manufacturing in the U.S. again. Yeah. I live in Buffalo, New York, or outside Buffalo, New York, and there was this big company that used to thrive. It was like pretty much the backbone of all of Buffalo. It's called Bethlehem Steel. What is Bethlehem Steel now? A rotting steel factory that is no longer in operation. That literally people lost their pensions, they lost their retirement, they lost their jobs. Let's bring some steel manufacturing back here to the country. Yeah, that might not be such a bad thing. Incentivize steel manufacturing in the U.S. again. I love that. I think I probably already said that. Most, what are you saying here, Chris? Let's see. Doesn't Warren Buffett have a stake in Bank of America? He probably does. Warren Buffett's got a stake in a lot of things. That's why Trump wants to annex Canada. Curious what happens after Trump's term. So can I tell this? I'm going to finish with this. So I don't know the coincidence of this, and this is definitely conspiracy theory shit, but we're going to have some fun with this. Have any of you ever read the book? And I don't know when this book was done, but I think in the early 1900s. It's called The Baron Trump Collection. Let me get my glasses on. I just started reading this book. Somebody told me I should read this. All right. So The Baron Trump Collection, Travels and Adventures of Little Baron Trump and the Wonderful Dog Bulger, Baron Trump's Marvelous Underground Journey, The Last President. This book was, I believe, written in 1900s. I started listening to it on the plane, and then I got talking with the guy next to me, which was a really great conversation, but hard read. But so you take that, Nikola Tesla. If you follow Nikola Tesla, you all know that he got thrown in jail. They stole all of his inventions, but it was said that he had time travel machines. So when you look at Nikola Tesla's museum, let's just call it that, of all of his stuff, who's in charge of that? Anyone know? Anyone? Yep. Time travelers. I know this is kind of wacky stuff, but does anyone know who's in charge of Nikola Tesla's, all of his stuff? Anyone? Nobody knows? Look it up. Donald Trump's cousin. Interesting. And then the more you start reading, the more you start putting stuff together, like The Creature from Jekyll Island. Read the last chapter on that. How would he have known that stuff? How is it even possible he could have ever known any of that stuff? And I'm told from my clients who had read this, the Baron Trump Adventures book here, that things are said in this book that never, ever, ever could have been predicted, but they're happening now. You really want to start going into some crazy stuff? You really start looking at how some of the things are happening? Let me wrap it with this. There's a late friend of mine, Stephen Arnio. He passed. I urge all of you right here, right now, go into my podcast, the Money School Podcast. Type in Stephen Arnio. Here, actually, let me try to do it real quick. Money School Podcast, Stephen Arnio. Money School Podcast, Stephen Arnio. Stephen and I became friends. I met him speaking. He wrote a book. He wrote many, many books. He was from Canada, actually. Nelson knew him. He wrote many books, How Hard Times Create Strong Men and Women. But he knew some things that I don't know how he could have known. And I'm trying to find my podcast. It's in here. I just for some reason can't seem to find the episode. But if you go in there and you find the episode of Money School Podcast with Stephen Arnio, it's probably on my YouTube, but it's on my website as well. In there, he was very frail. It was not like any other article. And so Nelson would say this. Stephen Arnio was always like this super clean cut guy, clean shaven, hair slicked back, like looked like $1 million, wore 3-piece suits, had hot women around him at all times, like lived in a mansion, drove fancy cars, like all that. But this time when I had him on the podcast, he had this beard, like just kind of looked sloppy, had a hoodie on, very frail and thin. And he was doing the podcast from his mom's house. What I didn't know is he had cancer. When he wrote these books, he would go out in the woods or go out in the jungle, I think is what he did. And he would go on these really long water fasts. All he drank was water. He almost killed himself many times doing this. And when he did these water fasts, that's when he wrote the book. He got clarity. I guess when your body is depleted or your body only has that and you go on these fasts, you see things clear. But I have to just believe some other things were happening too. I have to believe he had cancer and knew he had cancer for longer than we all knew. He never talked about it. And I have to believe that he did a bunch of studying because he was a pretty smart guy, that when you have cancer, you can starve cancer out of your body by just don't feed the cancer, hence the water fast. But nonetheless, cancer ended up getting the best of him. And it happened right after he was on my podcast. But on my podcast, he said this, 2019 there, Shauna shared it. 2019, last time I spoke with Stephen. He said this to me. Now, this is in 2019. He said to me, he said, Donald Trump, 2019, just put it all into perspective. He said, Donald Trump will be the first dictator of the United States of America. And it isn't because he wants to be, but it's because he has to save the country. I don't know what to make of that. I really don't. But sometimes you just have to realize that in life, you'll meet people that just have a higher level of knowledge than we can comprehend, a higher level of knowledge than we'll ever understand. Nikola Tesla, some would say he was an alien. Elon Musk, some would say he's an alien. Is he? Or are they? Or is there just something bigger that we don't understand? Nikola Tesla, did he literally know how to travel in time? If he did, and Trump's cousin holds the key to all that information, who's to say Trump doesn't know more? Who's to say Barron isn't the Barron Trump in that book that was written in the 1900s? Your mind starts going wild and you start thinking, holy crap, am I going crazy thinking this? Or is there way more to this story than we know? Well, there's probably way more to the story than we know on so many levels that we won't ever understand until the day we are standing in front of God and we see it all. Till then, we just are here to enjoy, to live, to love, and to have a lot of fun. And you know what? This show is a lot of fun, and I love it. So thanks, every one of you, for joining in there. Nelson, Nelson, you knew, Stephen. Crazy prophecy. Crazy prophecy. But is it just a prophecy? Thanks for joining me, folks. We'll be going live for March Money Madness this afternoon, 1 p.m. Join us by going to chrisnaugle.com/MMM. Totally free. Join us for this week's March Money Madness, week number 3. We'll see you then. Thanks for joining. I can't wait to see you this afternoon.